Hey, what's up, everybody? All right, this is Chef again, and we're going to make a weekly watch list today and just kind of talk about a few things, right? So first and foremost, we do have some upcoming events, and that is going to be CPI on Tuesday, I think is right at pre-markets. Monday, we have some inflation numbers going on, which is tomorrow. And Wednesday, we have Powell talking around 2:30 Eastern time. And then Thursday, initial claims. And then the Friday is going to be the manufacturing PMI for the S&P. So there's quite a bit of things going on. So regardless, and despite all the news and stuff, we still got to learn to follow the charts and figure out where something is going to change, where something is going to, um, go follow direction and things like that, right? And what to look out for. So either way, this week is going to be filled with volatility, and volatility just means that there's going to be a lot of up and down aggressive movements, and it's kind of perfect for every option trader out there if you can catch the proper direction on that specific day. Whether it's directional in the next 5 days or directional just intraday, both ways, it usually just snaps back up and forth, up and down. Either way, it's still great opportunity for option traders to take advantage of those percentages on ODTEs. Um, and then just in general, just catching some really good plays, right? So let's look at ES, and we're going to look at some levels on where something is going to be bullish and where something is going to be bearish, right? I do want to point out this though. This was very important from last week. We were on this trend on a weekly time frame, okay, and we literally rejected that. This is very important to know because we've been one, two, three times already rejected here. From the top, that doesn't count just because that's the top of it. The rejection starts here, here, and here. The question is always like where and how many buyers or sellers are going to show up. This is how many sellers showed up this week. So this previous week, because of the trend line, that's the strength of that so far. The continuation can actually go a lot lower because it is a actual trend. Okay. So the trend here, it's still bearish, right? So I want to show you, look at the strength of this one, right? So this is how many bears showed up down to 36.43. So basically from 45.94 all the way down to 36, what did we say? 43. Okay. The next one, we went from 43.24 all the way to this 35. My question is, are we going to have those same amount of sellers that are showing up here and then drop even further, right? Towards the end of the year. This can go 34, this can go back to 36. I mean, this legit can go anywhere in this area towards the end of the year. Now, this is a weekly time frame, so it's we still got like what 3 weeks for the year to end. So depending on what happens this week, we will definitely see either aggressive selling or aggressive buying. One of the two is going to happen, and it's going to be our job to identify where we're actually going to go. Now, it does look bearish until the end of the year, okay, because we already had the run up into the trend line, and this is kind of like where we're stalling at now. We can definitely be here towards the end of the year and just kind of hang out, at these levels for a potential breakout into next year, which would be, right here, right? But that's not the case just yet. We still got a couple weeks for that to even develop or, to catch any type of trend. There's a lot of stocks in general that are beaten down so much they're below psychological levels, versus like some good buying investing and some good selling off, which is some tickers that are real high up there as well that people won't want to buy right now. So this whole year we've been bearish. Okay, we've caught these reversals, we've caught these downtrends, we've caught a lot of uptrends and downtrends in between. And if you're hanging on still and you haven't blown an account, then you're doing a great job and you're understanding what this market is all about. But just know that this year has been tough, and I don't blame you. But definitely take it day by day, right? Things change pre-market overnight. Things change real fast, so you got to be able to adjust, right? So either way, we do have a bearish trend still, and we're gonna check out this 4 hour time. Here are some levels for you guys, so you guys can find out some real good targets. Okay, so first and foremost, anything below this 39, 39.20 right here. I'm using these candle bodies right here, and 39.30. This level right here, so 39.35, and then 39.23. Below that is probably gonna collapse because we're giving up all this right here. We're giving up all that demand. Sorry, all that structure we're giving up, right? Once we start breaking down, somebody's going to look for 39, 38.50, 38 and 37.50 all the way down to 37. So just expect a lot of whole numbers in this case, and expect some volatility to the downside. If we decide to hold here, 39.50 would be more of a safer entry for an uptrade down to up to that 4K, 40.50, 41, and then 41.50. Okay, that's the way you should look at this markets in general. So number one, we're bearish. Yes. Number two, do we break down, continue for the bearishness and then the volatility and the extra fear in the markets? Or do we hold and create this base right here this whole week and kind of just hang out in between right here? Okay. So this would be a base to actually hold and, kind of just whiplash up and down and fake everybody else. Whatever happens, just know below 39.23 or 39.20, it's coming down, breaking down the structure. Over that 40.50, then we're going to continue a new structure. Okay, so just remember those two levels, and those two levels, whether we're below it, we're bearish, whether we're above it, we're bullish. Okay, no matter what goes on. NQ, same thing. We're kind of just retesting from this top again. It looks a little weird, but definitely at a good spots. All this right here, so I just kind of want to point this out right here. All this is just kind of retesting, right? We've seen that we dropped down below, and then there was a lot of resistance, a lot of supply here. And then we finally broke down, and we came back and just tested. So we're right here again, okay, the same level. We're just chilling. So again, so for this one, it's a little bit easier because we have a nice level right here. Right here, that 11448, and then the top of this basically. That's it. So break above here, we're going back up to that base. Break below here, we're gonna have a nice drop down to this 1080. Okay, yeah, 1080. So it's either gonna, we're either gonna stay in here and like I said earlier, we're gonna just freaking go back and forth, up and down throughout the volatility, or we're literally just gonna collapse, or we're gonna stay back above. Okay, those are the two levels that you really need, right? 1170 and then the 1145. Yeah, 1145. So anything above this here is bullish up into the top. Anything below here would be bearish down to the bottom. Okay, very simple. So if we come back down, right? Let's just say we do come back down and then we do come back up, use that same level as a buy level to the top. Okay, or a level for rejection, whichever one you want to use. Same thing, if we go up and then we come back down, use this as a dip buy opportunity, and then your stop loss is right here to go back up. Okay, so it's very simple. Use the same levels. It's either going to break above and retest, break down and retest, or reclaim, or come down right here and fail and then drop, whichever one comes first. Okay. The next one's RTY. RTY already looks a little bit bearish. I think this one will probably see more continuation to the downside. So it might be the weakest one this week. So just look out for this one. Look for healthcare and financials and airlines. And then just a bunch of small caps in general that are probably going to be trending to the downside. But this one just looks a little bit weak. So again, this one, 1824, and then just that low of the day right here, continuation. Nothing much about RTY. Now, if we do look for a bearish play in general, I would look for the stocks in the Dow. Anything in the Dow right now has been trending like crazy. So if you just look at the weekly time frame, it looks like we never really came down in general, right? We went from this all-time high from 363 down to 336, which is not a bad drop, okay, to end the year. And we did drop down here below that 29, and then we just kept on rallying, and the Dow has been rallying ever since. The cool part here is that we do have a doji here with a followed by a red candle. So there's potential that the Dow can really take a hit this week if the volatility persists to keep on dropping and dropping and dropping. Then for sure you should look for anything in the Dow that's very high up there, things like CAT or BA or Disney. Some of those stocks are part of the Dow. HD, I believe, and then a couple other names out there. But either way, I think this level right here, it's either gonna make it or break it. That's how simple this one is. And then the high of that day right here, the candle bodies, you should be able to look for an uptrend or just continuation to the downside for the Dow. Like I said, the Dow could get hit pretty bad this week if the fear and volatility continues to be bearish. Okay. The dollar still dropping down from the last time I mentioned. This was the level, and it's been dropping ever since. As for the VIX, there's still not a lot of fear. It's just kind of hanging down in this 22 levels. But other than that, it's no big deal. But just pull this up on the day of volatility where the Fed speak, and then just set some random alerts whether it's going to go up or go down. All right, so first one I'm going to be looking at is Tesla. I like the setup here on the 4-hour, just because if we're looking for a bullish setup for the week, I think this is the perfect one, right? I would look for this right here, just at 175 to hold and stay above, or honestly, just above that 180 right there. Okay, so this is a dip buy opportunity if the market continues to be bullish. Okay, so basically the break of this base and then the retest and then the continuation on up. Over this 180, okay, just these candle bodies right here, 180.50. Most likely the trend will continue because we already have this bullish candle that can continue up. As long as we hold the pre-market levels, you can take it above the pre-market high, whichever one it is. Okay, that's it for Tesla, really. Other than that, we're gonna have to wait for the developing of the CPI and the FOMC. But either way, Tesla's at a good spot. Once we start breaking 175, then for sure, if the market is bearish, then go ahead and short it, right? The next one is going to be PayPal. PayPal has a nice little trend to the downside right here, and it has this little squeeze pattern. So this is all I'm looking for, 73. And I'm looking for 75 break, okay? So the reason for that is because it's a level over here, the 75. This was once resistance right here. This 75 right here, as you can see, okay? So again, anything that's been in the past will most likely happen in the future. So I wanted over to 75 to create a nice bullish momentum after this big drop already. So if this pattern can be bullish on Monday, then cool. If not, then we're gonna drop 73 and just continue on down, probably down into like 70, or even 68 if we're being honest here. So it's gonna be 73 or 75. Those are your alerts for the week. Okay. All right. The next one is gonna be Disney. Disney. So the reason I'm looking at this is because it had a nice green day, and it's almost like the same setup as Tesla. Tesla had a nice little base here. Like I said, as long as we hold 93.50, we should be good for calls and continuation for this actual play to continue. So it's a drop base rally with the continuation here. So that's kind of like what I'm looking for. Once you go 93.50, you look for 94, 95, 96, 97. You just look for a continuation up with the bullish market. That's all it is, okay? The next one is going to be a financial, which is JPM. Well, let me show you XLF first, okay? This one is actually pretty nice because if you're looking for direction in financials, you have to know where the ETF is. In this case, what do you see? You see a nice drop and a nice base. This is either going to go up or it's going to continue down, whichever one it does, okay? Whichever way. All you got to do is literally come on here, create alerts on the break above, and then you wait for that 35 to break. And then down here, same thing, 34.47 or 34.50. You set the alert and wait for that break and then continue on to the downside or continue up to the upside. This way, when you look at your financials, you look at JPM, for instance, and what kind of setup do we have? Do we break above 35? Or do we break below, right? So this is like a drop flag, and then it's either going to break 132 to the downside, 131, 130, or we're literally just going to continue and hold this channel to the upside if we break XLF over 35, right? So it's very simple, actually. You just got to pay attention to this right here. After a nice run up, it's finally dropping down. So this pattern can actually cause the reversal to the downside. If not, we hold and we break above 134 and continue back onto that high of 138 or even as high as 140. Okay, so that's JPM for you. The next one is going to be SQ. SQ actually showed a nice green day as well, so that's why I'm looking at it. The pattern here is a rally-based rally. So here's your rally right here. Here's your base. Here's your rally. This is actually a staircase pattern. So if you're looking for a staircase, this is what you're going to look for. Kind of like that. That's what you're kind of looking for. I mean, this can happen in one day, to be honest, but the next few days, we can literally trend back up all the way into that 69 or even as high as 7, okay? So that's kind of what I'm looking for SQ. I'm looking for the continuation of this specific trend. My entry would be above the pre-market, whatever it is. Like, let's just say it's here, I'll go long there. If it's here, I'll go long. If it's here, I'll go long. Whatever it is, as long as it stays above the 64.60 right here. This is my long trigger to go up. If you want to catch the breakout, then you would do it over that 65.80 or 65.50. But that's all I'm really looking for. I'm looking for a nice uptrend, a green Monday. If this shows strength, then it's definitely going to be a good play for continuation on the rally-based route. Okay. The next one is Amazon. Amazon's barely hanging on by a thread. You can see here after that earnings, we dropped down into this like 88 right here or 87.60, and we kind of just been holding that. So that's what makes it a little bit easier about Amazon is that if it breaks 88, then go ahead and go bearish. But if we hold here, it's going to be calls all the way to 90, 92, 94. Simple trade right there. The next one is going to be Meta. This one has like a little flag pattern going on here. So just keep your alerts over 117.50 and then 115. It's going to break either up or down. Very simple, right? Right here. Or right here. That's it. All right. So like we talked about the Dow, we're going to talk about cats. Cat's in a good spot as well. So if this thing just continues down below this 227, below the low of the day, then look for a bearish move to 222, even 220. So it can really drop down to 212, basically using this here. Okay. Look for a bearish move. If not, we're going to break above 230, which I'm not looking for calls here at all. I think cat is way too high up here that if we do go bearish, I would look for a short cat. Okay. The other setup that I do have is McDonald's MCD. This is getting really, really tight up here. This is the weekly all-time high around 282.40. But then this base right here is very, very tight. Even with the market having direction in general, like with the up and downs movements, MCD has just been hanging out right here and it's been doing some sideways movement. It hasn't been having aggressive moves. It's just been squeezing here. This is definitely worth it to trade to the upside. I know it's at a weekly all-time high. But either way, it's either going to be a great short at 270 or it's going to be a great long at like 275. Okay. Maybe 274, maybe like 274 to 275, this area in general can be a great long play. If the market finds some crazy direction, whether it's up or down, keep this one on high alert because it can definitely have a big move with the market. Okay. So nice tight setup here. I mean, this literally can just stay sideways all day, all week long, right? Either way, keep this one on watch, please. All right, so here goes spots. Very simple here. It's either gonna hit or it's not. Nice little trend line. Resistance right here at 80. So anything over 80, let's go bullish, and we're gonna target the high, which is at 86. Okay. Or 87. I would target 86 first. Don't worry about the 87. But that's a simple trade right here. Simple breakout with a bullish market, of course. Okay, so watch out for that. Netflix is the last one that I have for you guys. So I want to come up here and really just talk about this daily time frame. This thing had a massive gap that every trader has been waiting for. Okay, and it basically hit. So from right here, this thing had a gap, and people followed it. Okay, so they followed all the way to 330, and now what happens next? The gap is basically filled. We're shy by like $1, as you can see right here. About $1. We're shy. Okay. The gap was filled at around 331. So yeah, we're shy by like $2. Okay. So either way, psychologically, your gap has been filled. Okay. We do have this is the daily time frame. We do have a hammer here. That hammer of a daily time frame usually identifies a change of direction. So we can literally come back down to this 300 by the end of the week. I know that sounds like a crazy move, but that's a $20 move that we can catch to the downside. Plus this gap right here that everybody's going to mention from 310 to 320, somebody's going to try to gap fill for that. Keep in mind that this hammer candle is your directional move. Below 320, I don't care if you're at 319.70, 319, 318, it's still bearish all the way down to this 300 or even 310. The minute we start to break above that 322, it's going to be bullish all the way into 330 to fully fill that gap. Okay. On top of that, it's right at the top of this trend line. So I drew this one down here, and then I drew that one. Okay. And then now let me show you something else. Let me show you the weekly. The weekly is a doji candle. We're right at resistance, right when we gap filled. So basically the move for Netflix looks a little bit bearish. I give you two forms of being bearish, right? We did the gap fill, we got the doji, now we're waiting for direction. The thing about it is that the 4-hour, it's still bullish, no matter how you see it, whether you have this pattern to the upside or not. It's the strength of this, the strength that we dropped, came back up, we dropped, we came back up, but we never made it any lower. All we keep doing is going higher and higher and higher. So there's definitely strength in this. So be aware. Okay, so I'm going to keep it very, very simple here with Netflix. 320. Below, I'm targeting the trend line of 300. Okay. Above it, I'm targeting 330. That's it. That's all I'm looking for Netflix. This can stay up here in between all week until the CPI, until the volatility and all that stuff. But just know that if the market drops, I am going for Netflix shorts because it has the best risk to reward. It has a gap fill level already filled, basically. It has a weekly doji, and it has a daily hammer all in one. On top of that, we're at the top of the trend line of this pattern. So a lot of technical analysis on this. We just got to be patient. Patient as to finding direction and finding the volume of where the aggressive buying or selling may be. Either way, I'm using 320. Anything above 320, I'm going long. Below 320, I'm keeping it short. That's how simple I am going to keep it with Netflix. And this is going to be my top play of the week. It's either I'm going to hold below 320 or I'm going to hold above 320. One of the two is going to happen. Whatever comes first, I don't care. Monday will tell us where Netflix is going to go, but the volatility will create some crazy movements all across the board. So whatever happens, be careful. Okay. Don't bag hold something that's breaking above and you're short. Don't bag hold something that's breaking below and you're long. Okay. Manage your risk properly this week and be in and out of your plays no matter what happens. Even if something moves, over 1,000%, who cares? Get your play in, be in and out, and be happy with what you have, right? Because you're able to catch a directional play, no matter what it is. Okay, bearish or bullish, who cares? Take your money and get out. But yeah, that's it for me, guys. I hope this kind of helps you guys understand a little more of some of these plays. I know there's tons more out there, and definitely do some DD because it's going to be important. Okay. So here's another ticker real quick. Over 28.50, I am long on INTC. Below 28.20 or whatever the pre-market is going to be a nice short. Okay. But yeah, have fun, guys. Be careful with the markets, and hopefully we don't collapse as bad. But whatever the market gives us, right? All right, guys. You guys have a good one. Enjoy the rest of your week, and be expecting another video like Monday or Tuesday. And I'm gonna be showing you guys a couple more things on how to use some indicators to some of my favorite indicators that I know how to use that I've personally used in the past that can potentially help some of you traders out there to understand how to properly use these indicators in order for you guys to be successful and consistent. Till then, stay green, and I'll see you on the next one. Peace.